Good morning, champs. Hope you are doing very well indeed. I am back after a quite a period of distraction. I am back in full force and hope to crush the charts with you. What I thought is actually really humorous is that the backgrounds that I show you every day are completely automatically generated. It's got nothing to do with me picking the theme. So this is actually quite funny, I think. Let's have a look. Let's get stuck straight in. Talking about the Bears, what I said, I think it was last week sometime, must have been, is that we need to have a look on as far as the Dixie is concerned, this order block over here. What has happened? We've had a beautiful reaction and bounce straight off of it, off of the channel, and we still have this bearish market structure. However, we have had a perfect bounce off of the bottom of the channel. Let's see if we can reclaim this SR and off to the races. What I did find quite interesting is that I spotted this. Let's change the right chart. I spotted this long-term SR line, which I've drawn out, as you can see. It's just yet another trend line, just to track. I thought quite interesting. If we do claim that, then we have some pain ahead. Right, so let's just continue tracking that. Then, in as far as our SPX goes, as you know, we were in this range over here, had a bit of weakness, didn't even get up to the top. We've broken down below this, back tested it as resistance. We also have the other view that we've been tracking, as you know, this head and shoulders pattern seems to be playing out with this area over here that I said we need to have a look at as critical support and or resistance. And what we're doing is literally just bouncing around in this zone, which I marked out. So essentially nothing much has changed there, but what we do need to do is just continue tracking this Dixie. The thing is, nothing lasts forever, right? This uptrend is pretty savage, but it's like I have also pointed out in the past. Let's just quickly have a look here. Um, on a weekly basis, we have this perfected TD 8 and 9 setup, which pretty much means that we can start looking for this to roll over. And as far as that theory is concerned, also, as you know, we cannot expect something to go up like this forever. It's been an absolute onslaught to the upside. So let's just continue tracking that together as well. However, trend is still intact. We do have some lower sort of medium term time frame bearishness. Let's turn this off. And like we've seen something looking like that. However, we are now on this uptrend over here. Right. Enough of that. Let's have a look at our crypto markets. So the spot CVD, as we always tend to use this as a sentiment indicator, as you have seen here, we've had this so far pretty bearish kind of high time frame market structure. If we do break these lows, if we breach them, then I think we're in for some pretty serious pain. This is not a very bullish looking picture in terms of market sentiment. This is essentially down, right? The other thing here, in terms of our perpetual CVD, aggregated perp CVD, that is up and flat. So all in all, this is more bearish than it is bullish, and that's what we've seen pretty much in the price action. All right, let's continue having a look at our picture here. A few weeks ago, I have marked this zone out here as a demand zone, right? As you can see from all this wicking. And as you can see, essentially it got us up to where we are now. But however, if you have a look here, this point of control we've spoken about, and you can see the wicking into this point of control. So this now essentially is the reverse of what we've seen at the top. If we do not breach this zone here, which is definitely a supply zone, you can see it panning out in front of your eyes. If we do not claim this point of control, which looks like really like an iron curtain, we are pretty much bearish from this very short little patch over here, as you can see. Okie dokes. Now, what I wanted to show you here, later on, I'm going to draw out a couple of zones. Please bear in mind this weekly order block that formed over here as support. Please also bear in mind that I've now taken a new anchored VWAP from these lows over here, and it is acting as a support zone. So what I also want you to have a look at is this midline of the Bollinger Band on the daily time frame, this wicking over here. So what I'm going to start doing is I'm going to draw a picture for you to show you what zones to trade in and where we can start identifying a trend shift. So right now it's very simple. We are in this range over here, okay, and we can trade that from a day trading perspective. As I've said in the past, from a higher time frame perspective, we are not looking bullish until we breach and hold this point of control line as support. All right, let's drop the time frame to 4 hours so that we can actually start having a little more of a look into exactly what I would be looking for in terms of our current picture. So this is the supply zone, as I have shown you in the past. And these lines here, these support resistance lines, have been the topic of our daily updates for quite some time. But now you can start really seeing how they play a very critical role as to where exactly we are in terms of our zones of trading. So like I said, currently we are in this zone over here, and we can get some pretty decent day trades out of it. Now, we do have, as I've shown you, bearish market structure, and we also have a very, I don't know what's going on with this on-screen pen. Okay, let's try this. There we go. What I wanted to show you here is that we have some bearish CVD divergence. Okay, so like the tops, as you can see, they're all pretty much going down, and you can take this CVD and we are going up. All right, so that is a bearish divergence. We have already seen it playing out a little in terms of this price action over here rolling over. So essentially, if we spike up into that supply zone that I showed you earlier, you do have a possible trade down to the bottom of the range, all right? And you have this bearish divergence that is also behind you, adding weight to that idea. What I did want to show you, this is very interesting. We've had this massive spike up in open interest yesterday on a Sunday in the late, I couldn't really call it a session because it's Sunday, but that would correspond to the New York session. So that's very interesting. And as you can see, we are now at about 520 million open interest on the Bybit perpetual futures exchange. And that is we haven't seen a high like that in many weeks. So essentially, this is just rocket fuel for a nice big move. So bear that in mind. Excuse the pun. Okay. Right. So what I have drawn out here is this critical support zone. And the reason why I've drawn this out here is because essentially, like I said, we are just in a mini range over here, right? We have seen that there's a little bit of a bearish stance. However, overall, we are in this beautiful uptrending channel over here. And really what you need to do is just trade what is in front of you. Don't get too clever. So if you get your entries for shorts in this zone, take the shorts down into this area over here. And you're going to see that when I drop the time frame once more. I just want you to know that this critical support zone has been mapped as a critical support zone for the following reasons. As you can see, the rest of this week, let me get this back here, this cursor back. You can see that this point over here corresponds to Friday, okay, so the end of the week. What we are doing is we essentially are just ranging in this range, right? If we continue doing the same thing, we need to find support over here to keep this overall trend intact. So that's very important that this week, during the course of this week, if we do want to continue ranging upwards slowly, this range has to hold, and then towards the end of the week and into next week, we have to either break up or we have to break down. Decision time. So what are the factors that we have in terming this critical support? We have this wicking over here, meaning that it is so far holding as support and keeping us up where we are currently. We have our anchored VWAP, and we have the bottom of this channel over here. I'm also going to show you a little bit of liquidity, etc., where if we do break down beyond this, then we have essentially broken down and are creating a new trend into this zone over here, and we just play it level to level like we have been doing. Very, very, very simple stuff. Okay, so essentially what I'm doing is I'm just giving you this update. Currently, we are in this zone over here and sort of playing around the midpoint of it. Okay, so let's move on. What I would like you to do, this is just a chart that is used for very, very quick spotting of potential areas of interest where market makers do tend to drive price back if there have been imbalances. So you can see here's a bit of an imbalance, and what I do fully expect based on range theory is that our price gets attracted to this point like a magnet. And as you can see, there's not much going on in and around this area here. So essentially, and what I mean by not much is that there's not much price action history. That's it. That's what you have over there. So it's basically a foregone conclusion that we are going to probably during the course of this day revisit that area and probably a little lower. And I'll show you in the next chart. The reason why I'm taking a little bit of time on this chart is just to show you where I get this market maker area of interest in our following chart, which is this chart over here. This is now on the 30-minute time frame. And what I've done here is I've taken our market maker area of interest and I've put it in here. I have created a fixed range pull from this point over here, obviously until the end. And as you can see, hey presto, what is it showing us? A very, very simple trading range where you will start taking your shorts, like I've always said, from this area up here. And you will start looking for longs in this area over here, i.e. above and below the value area, high and low. Very simple. Okay, so then what we do is we start looking for how and where we would potentially like to enter. So for a very quick little scalp trade, what you're looking for is potentially a swing failure pattern off of this wick over here. Quite a cheeky little trade. We didn't quite get into this liquidity area, and so essentially this hasn't been taken yet, this low. So look for a sweep, quick sweep, a very low time frame market structure change between the 5 and the 1 minute and up essentially. So that's where you get your entry. You will, if you are lucky, because things are looking pretty weak and pretty bearish, you'll ride it up to the top somewhere over here. Okay, you'll take profits in and around the point of control area. You can shave a little bit off of the VWAP, the point of control, and then of course final TP right up at the top here. That is a quick little scalp trade. Essentially, then what you would be looking to do is have a look for reactions around the bottom of or below this value area, low area over here. So essentially, I have marked out 0.71 fib. The golden pocket sits somewhere up here like this, and it's not an area I would be trading because of that there's not a hell of a lot going on here in terms of price action. You're in the middle of nowhere actually. So essentially, you've got this nice confluence. The 0.71 fib has been working very, very well in the BTC and actually a few of the crypto assets. So 0.71, you are now below your value area low. You have got a pool of liquidity, and the reason there is this pool of liquidity is very simply, I think a lot of people are doing similar analysis, not exactly the same, but they're doing similar analysis. And if you have a look on the heat maps, there's this strange area of liquidity. There's no real reason for it. There are no order blocks in the area. There is, here's the low over here. Essentially, why there's liquidity there is, I think a lot of people are looking at this range and have preset their limits. So look for reactions in and around this area over here. It's about 27.3. Okay, if it smashes straight through, look for your reactions below this week. Okay, if we have a reaction, then you can trade yet again another swing failure pattern reaction up to the top again. Very, very simple. Okay, what I did want to show you is the liquidation heat map. So it pretty much corresponds to exactly what I've said. You have a lot of liquidity in this area, so I do expect a nice swing failure pattern type reaction at about, let's see exactly what this is about 27.6K odd. Okay, you then have very little liquidity, and this is not much in comparison. This is not much in comparison. So we have 123 million as compared to 86 odd million. So above us, we have 110 million. Have a look at your market structure. We are tending down. So essentially what we would be looking for is reactions off of this area. I don't see that all of a sudden it's now going to spike up. First, let's have a look for the sweep below. Right. And that is pretty much it. I am not going to be having a look for any further trades above or below this area because we know what our range is. We know where we are and we know what to look for. If we break down below this zone, it's then yet again, we're looking in this zone over here. And if we have a surprise, the surprise is that we break above this area, then we have already marked out these zones as I've shown you in the past, which is your 28.8K. And it's as simple as that. If you have any questions, please don't be shy to pop them in the group. And other than that, I'm going to wish you a very, very good day. And I am starting with our 10x challenge. Very, very exciting. If you are still wanting to get on board, please do go to my Twitter. Give me a follow. Have a little bit of a comment on the tweet that I have highlighted below. And have a very, very good week. Cheers then.